Dinar shift. The financial world is now turning its attention toward a development that, while subtle, carries potentially immense implications for the Iraqi dinar. Reports are emerging from deep within the global banking infrastructure that contract rates for the Iraqi dinar are now appearing on internal bank screens. This is not public speculation or marketplace chatter. This suggests a movement within the secure, regulated channels of the international banking system. For those who have followed the dinar's journey for years, awaiting a significant event that could alter its valuation, this particular piece of information is being widely scrutinized as a possible indication that the long-anticipated currency restructuring, CR or revaluation, RV process may be quietly moving forward. Understanding the precise nature of this development requires breaking down the jargon and focusing strictly on the mechanics of the financial systems at play, steering clear of any emotional or speculative commentary. This reported appearance of contract rates on bank screens refers to exchange rate values being loaded into the internal processing systems used by banks to manage large-scale currency conversions and international transactions. These are not the rates a casual traveler or everyday consumer would see at a public exchange window. Rather, they are the figures utilized for institutional planning and preparation for a formal exchange event. The significance lies in the source. These systems operate under strict regulatory oversight and require high-level authorization to display currency values not currently active in public trading. This internal preparation suggests that various financial bodies are aligning their infrastructure to handle a potential future shift in the dinar's recognized value. It is, therefore, a signal of readiness within the system, although it must be emphasized that system readiness does not equate to immediate, guaranteed public action. The history of the Iraqi dinar's valuation rumors is long and complex, marked by numerous unverified claims, forum posts, and optimistic predictions that have often failed to materialize. Many long-term holders have developed a healthy skepticism, having witnessed multiple cycles of excitement leading to disappointment. This context is crucial when assessing the current reports. What distinguishes the appearance of contract rates from past hearsay is its purported location, within controlled institutional banking environments. Unlike an anonymous online tip, a bank's internal system displaying a rate suggests a formal, if confidential, preparatory action taken by entities subject to national and international financial governance. This institutional layer of confirmation lends the report a weight that previous, non-verifiable rumors lacked, moving the discussion from pure conjecture to the analysis of systematic structural movements. To clearly define the term, a contract rate is an internally established, preset exchange price at which a banking institution agrees to convert a specific currency when a formal transaction or event is triggered. It acts as a baseline figure for banks to manage their exposure, calculate liquidity requirements, and prepare necessary software updates for a large-scale currency shift. In simpler terms, it is a reference point used by the financial system to ready itself for the potential reintroduction or re-rating of the dinar on a broader market. Banks must plan for future events, and loading a contract rate is a necessary, tangible step in preparing for the logistics of a revaluation process, which involves massive accounting, clearing, and settlement adjustments across countless transactions and ledgers. The mere presence of this number on a terminal signifies the deep, complex preparatory work being undertaken behind the scenes. The current timing of this development is intrinsically linked to Iraq's sustained, multi-year efforts toward economic reform and financial stabilization. Over the past few years, the nation has worked to strengthen its regulatory frameworks, bolster its oil revenues, manage inflation, and, crucially, modernize its commercial banking and financial technology infrastructure. Currency revaluation is a massive undertaking that cannot be enacted spontaneously. It requires robust coordination with international compliance standards, verified foreign reserves, central bank policy clarity, and the readiness of institutional banking software worldwide. Seeing contract rates emerge now, in 2025, may indicate that Iraq's financial reforms, including audits and systemic upgrades, have reached a critical operational threshold where the central bank and its partners feel confident enough to proceed with internal technical preparations for a major currency repositioning. The implication of this technical readiness for the Iraqi dinar's holders is profound. If a formal revaluation or currency restructuring were to be officially declared and implemented, the current, relatively dormant exchange value of the dinar in global Forex markets could potentially increase. Historically, the dinar has traded at lower rates following periods of economic upheaval. A contract rate, by its nature, would presumably reflect a new, higher exchange rate intended for domestic stabilization or broader international circulation. Such a shift could dramatically increase the dinar's exchange value, potentially activating global conversion and redemption channels that have been quiet for years. This technical signal, therefore, is viewed by long-term holders as a possible validation of their patience, suggesting a serious structural effort is finally in motion. However, it is paramount to maintain a balanced perspective. A signal is not a final announcement. The appearance of contract rates inside private bank systems should not be mistaken for an official guarantee of revaluation or immediate public action. The pathway from internal bank preparation to a fully tradable, internationally accepted currency is protracted and subject to numerous potential points of failure. Critical steps still required include formal public governmental approval, definitive statements from the Central Bank of Iraq, regulatory compliance across international borders, and eventual acceptance by global currency markets and financial institutions, like the International Monetary Fund, IMF. The entire process is exposed to political and economic risks, external pressures, or simple logistical delays that could postpone or even prevent the final outcome. Therefore, this moment calls for objective monitoring, not emotional exuberance, recognizing it as a key potential inflection point rather than a final conclusion. Should the current trajectory continue, several sequential events might unfold in the financial landscape. Firstly, the internal visibility of these contract rates could expand, with more international and domestic banking institutions updating their operational software to reflect these preset values. Secondly, the Central Bank of Iraq or other regulatory bodies might issue formal public communications, confirming their state of readiness, providing a framework for the potential revaluation, or outlining the strategy for reintroducing the dinar into the global financial environment. Following this, a controlled testing phase might commence, possibly involving small-scale trading windows or limited conversion channels for official government transfers, allowing the financial system to gauge market response and ensure compliance protocols are functional before a broader release. The subsequent step, assuming the initial tests are successful, would be the relisting of the dinar on major international foreign exchange, Forex, platforms, or at least a public announcement of intent to do so. This progression, from private, internal banking data to official public policy and then to global market adoption, is the systematic path toward currency repositioning. The current situation suggests the financial world may be observing the very initial, highly technical steps of this structured flow. Each progressive step would require verifiable public announcements and a measured, predictable execution by Iraqi financial authorities and their international partners to build and maintain market confidence. The psychological impact of this news on the dinar holding community cannot be overstated. Years of waiting, often fueled by unsubstantiated rumors, have led to widespread skepticism and investment fatigue among long-term holders. The presence of hard data, contract rates within regulated banking channels, offers a potential renewal of hope. This can shift the community's focus from tracking speculative hype to collective, fact-based research and responsible information sharing, which is a significant maturation of sentiment. However, if this news is disseminated without proper verification and context, it carries the inherent risk of inciting panic buying, hasty decision-making, or an emotional rush based on premature expectations. Responsible investors understand that sustainable progress is built on verified facts and deliberate action, not on emotionally charged collective frenzy. For any individual currently holding Iraqi dinar, this development signals a critical need for heightened informational vigilance. The priority should remain on gathering data and preparing logistical strategies, not on making impulsive financial moves. It is imperative to track official announcements exclusively from authoritative sources, such as the Central Bank of Iraq or official government channels, and to disregard unverified claims or posts that guarantee exponential returns. Informed individuals maintain detailed records of their holdings, including serial numbers and acquisition documentation, and focus on formulating a flexible conversion or investment strategy if a formal event occurs. Preparedness, built upon verified information and calm assessment, is the only sound response to these potential systemic shifts. The successful revaluation and international tradability of the Iraqi dinar could extend its impact far beyond individual holders. Such an event would likely attract substantial foreign direct investment and capital influx into Iraq, driven by institutions and funds seeking opportunities in a currency that has been repositioned after a period of stability building. This could stimulate foreign trade, bolster the nation's economic stability, and potentially strengthen its domestic banking sector. On the global stage, the reemergence of the dinar would introduce another active currency into the Forex market, potentially affecting international oil and trade contracts, global remittance flows, and the diversification strategies of large-scale international portfolios. Therefore, the ripples of a successful revaluation would be felt across the global financial ecosystem, underscoring the magnitude of the process currently underway. Yet, every major financial transition is accompanied by considerable risk. A premature or poorly executed revaluation could damage international confidence, deplete currency reserves, or lead to internal banking system instability. If the political or economic groundwork is not fully settled before a public change is announced, what appears as a positive signal could become a catalyst for market volatility or even capital flight. This is why the process, even at the stage of merely posting internal contract rates, demands extreme caution and meticulous management by the financial authorities. The delicate equilibrium between stimulating market interest and maintaining systemic control is a challenge that must be navigated with absolute precision to ensure the intended positive outcomes are realized without destabilizing the national economy. For Dinar holders, the actionable strategy remains centered on prudence and systematic preparation. Firstly, refrain from all forms of panic buying or selling. The contract rates are an indication of planning, not a formal activation notice. Secondly, prioritize monitoring official releases from government and central banking institutions, treating any non-official information with caution and verifying its source. Thirdly, ensure that all current holdings, whether physical notes or recorded balances, are properly documented and stored. Fourthly, dedicate time to developing various contingency plans for scenarios ranging from full, successful revaluation to long-term delays. Having predetermined, rational responses to different outcomes ensures that decisions will be based on strategy rather than the inevitable surge of emotion. For those observers who remain skeptical of the long-term prospects, the caution is valid, as there is always a chance that this internal bank screen activity could represent a mere test run, an unimplemented contingency, or an effort that may be indefinitely delayed. This potential for non-realization is a reality that must be accepted. However, dismissing the development entirely would be equally imprudent. The current news, the movement within regulated banking systems, demands careful ongoing observation. The key difference between engaging in hopeful speculation and conducting sober analysis lies in one's actions: to watch, verify, and anticipate future possibilities based on verifiable, systematic data, rather than blind emotional enthusiasm. A credible, defining sign of genuine progress would be an official public statement from an Iraqi financial regulatory authority confirming the preparatory steps for revaluation, or detailing the plan for reintroducing the currency into broader international trade. This governmental or central bank confirmation would officially transition the development from an internal bank system change to a public policy initiative. Other clear indicators to monitor include banks formally opening controlled conversion windows, even for large-scale institutional transactions, as well as announcements from international Forex platforms regarding their intent to relist the dinar. Continuous updates within banking systems, which integrate new, consistent exchange rate tables across multiple institutions, would provide a powerful positive signal. For those holding physical notes, particularly long-term holdings, this period is a critical reminder to inspect and prepare those assets. Verification of condition, serial numbers, and documentation is essential, as logistical challenges with damaged or undocumented currency could arise during a formal conversion event. The proactive inventorying of holdings ensures readiness, preventing one from being caught unprepared during a rapidly moving, potentially high-stress period. Preparation is a shield against panic, providing the clarity needed to act decisively when and if the time for conversion arrives. Considering the broader domestic economic implications, a successfully managed revaluation could significantly strengthen Iraq's domestic banking sector, improving its capacity for attracting foreign capital and supporting infrastructure development. For the average Iraqi citizen, a stronger dinar could boost purchasing power, particularly for imported goods, and potentially stabilize domestic markets. However, a rapid currency transition, if mishandled, risks triggering inflation or market distortion. Therefore, the entire process hinges on transparency, meticulous regulation, and measured execution to manage the societal and economic growing pains inherent in such a massive financial shift, emphasizing that regulatory oversight is more important than pure market hype.